And our next speaker to help with that is Bill Lang, coming to us from a pretty ordinary time zone in the UK. Bill is the Executive Director of Small Business Australia. Bill is a business educator, a coach, and an advisor with a passion for helping businesses improve performance through individual skill development, strategy execution, and capitalising on the opportunities presented by the digital and international business revolutions. Bill works with the team at Small Business Australia and their team of business coaches to help business owners and leaders achieve their goals, to achieve more success with, and here's the important part, far less stress. Bill, welcome. The AFR last night rated small business as one of the winners from the budget. Do you agree, and what are your thoughts?
G'day, Matt, and good morning, everyone. Well, I think most small business owners, when they have a look at the AFR, know that that paper is pretty focused on big business. And I'm not sure the journalists have really had much of a detailed look at what's in the budget, directly for small businesses. But if I sort of think about the budget, alongside what the priorities are of small business owners, our most recent research has been pointing to there being 4 key things that are important to the majority of business owners. That's inflation. Secondly, interest rates and the level of interest rates, access to skilled workers. So, Madeline made a very good point around that consistently being something that particularly growing businesses are looking for. And then more overall consumer confidence, so that people are employed, confident about their employment, confident in their ability to look after their lives, manage the cost of living, set some money aside for the future, etc. So they're the 4 priority areas that literally cover 80% of what business owners are telling us is important to them. Madeline's made a good point, and I think most of the business media that I've been reading over the last few hours, while everyone on the call's been sleeping, has been pointing to the question around whether this additional stimulus, effectively in this budget, the extra $13 billion over the next 2 years that the government will be spending, will actually add to inflation. Because if it does add to inflation, that certainly makes the job of the Reserve Bank harder, and it means it has a negative impact on one area that's a priority for business owners, which is inflation, and another area which is interest rates for those businesses that are borrowing money, and whether that be an overdraft or a fully drawn advance, it has implications. There's no doubt, though, that the initiatives to help particularly lower income people, whether it be around childcare, whether it be around family support payments, whether it be about lower cost access to see the GPs for some citizens, whether it's around $500 towards the cost of energy, all of those things are ultimately positive for small businesses from the perspective of people being in a better position to have some money available to buy the essential products and services that we all need. So whether that be retail food, the businesses that are in retail apparel, basic retail service provision, those businesses in those sectors will certainly benefit from consumers potentially having some more money available to be able to purchase those things. A couple of specific things, and I'm looking forward to hearing what the SW experts have been able to pull out around specific things. But the instant asset write-off, I think back in October, they were talking about moving it, from a significant number, north of $100,000 annually, down to about $1,000. So the $20,000 is a positive. However, $20,000 is not going to buy you a new ute if you need it, or a new delivery van. And certainly our research indicates that those instant asset write-offs of a chunky amount certainly help business owners make decisions about buying things that will further add to the productivity of their business. So it's good to have the 20,000. Higher certainly would have been better. It's also good to see that there's going to be I think a 20% additional deduction available for investments in moving to cleaner sources of energy for small businesses. And I think it might be up to potentially a spend of $100,000. I'm not right across the detail of it, but that's certainly a positive as well. Anything that the government can do to provide incentives that make it easier for business owners to make those sorts of decisions, that where they can more clearly see a return on investment, is absolutely a positive. As they do, the politicians have all coloured persuasions in terms of the shirts they wear around election day. Lots of big numbers thrown around, $300 and something around new grants related to innovation for small business. I think we need to see what the detail around that is and whether those grants are going to help businesses innovate. And the majority of businesses innovate in a couple of areas. So a rising issue of concern for many business owners is anything and everything to do with digital data, data security, cyber security, management of private information. When we see some of our biggest corporations are struggling in these areas, and we know that certainly the educational sessions that we've conducted at Small Business Australia with our partners like Microsoft attest to, we're up against, in some cases, nation states, but certainly very well organised crime, where billions of dollars are being spent on their state-of-the-art approaches at going about, stealing people's data and stealing their identity. So it's a growing issue. I'm sure there's not a person that's there today that's got a business hasn't received in the last couple of days, information about getting a refund on their payroll expenses or something else. I think, looking at my email earlier today, I think I had 5 emails that were sent to Small Business Australia from people, attempting to actually rip us off. So there's a investment, I think, of about $27 million with the Council of Small Business to help them implement something called a cyber warden program with small businesses. That sounds like a positive thing without having any of the detail around what that involves. But increasingly, we're spending money on IT. There's a lot of inflation in IT services. It's a fast-moving area. That's another area where getting some, direct support to help business owners, access, cost-effective and quality advice is something that we're seeing continually when we're conducting our own research. But look, I think, again, overall, if we don't see, if the forecasts around inflation coming down prove to be the case, that will be a positive. If we see less pressure on the rate of interest rates rising, that will be a positive. Now, the immigration numbers, for those of us that are based in capital cities, I live in Melbourne, to see it go from, not much during the pandemic, of course, but I think prior to the pandemic, we were running at a couple of 100,000 people a year. To hear that that's 700,000 over the next 2 years, it will be good if those people coming in have the skills that are required and the level of productivity with those skills to hit the ground running. So that's an important thing for all business. And it's not just about trying to get a warm body to come to work, but it's that combination of knowledge and skill and mindset and motivation to really contribute to the business that we're all looking for, those of us that employ people. But I must say, we've got concerns around infrastructure, the issues that are around with respect to transport, housing. That's a lot of people coming in. And we're already seeing lots of issues now across the building sector, as a result of significant inflation with key inputs and fixed price contracts. And we're starting to see the uptick now as a result of in some cases poor business practices, but in some cases they find the earlier government stimulus packages during the pandemic that encouraged lots of people to go and do renovations and do additional building. Causing in some cases, major long-term, sustainably profitable building businesses to go out of business. So look, I wouldn't give it sort of the 7 or 8 out of 10 that the AFR, Matt, would appear to be giving it, but on balance, if consumers are confident, if they're confident about their jobs and with some money to spend, and if we can have some more employable people available, they'll be net positives for small business owners.
Thanks, Bill. There are a couple of questions coming through for you, if you can stay with us for a couple more minutes. Firstly, are there any new grant funding programs available for small businesses?
The Treasurer talked about them at a very high level, sort of under the heading of sort of innovation and changes to the training system. But we're not aware of the detail yet. And again, it's on budget night, we'll often hear about, $200, $300 million being put towards things. Sometimes it was stuff that was already budgeted effectively and they're just re-announcing it. But I think have a good chat with your advisors at SW or your grants advisors as more detail comes out about those things. The other thing I think is very important is, we're about to hit the end of financial year, sort of state of the year, and with respect to, legacy related opportunities with things like instant asset write-offs and others, I'd encourage everyone to be getting a conversation underway with their tax advisor and their accountants, in coming weeks to ensure that everything is, optimized and maximized before June 30. As well as then the implications for what is coming after that with respect to your planning.
And Bill, just one further question, which is a broad one, I guess. But what is on the wish list? Yeah. So if you had a 10 out of 10 budget for small business, what would that look like?
Look, there's a number of new organisations that have been announced in the budget, and that's going to mean more bureaucrats and more regulation. So we consistently see in the top 5 things that are a concern are the regulatory burden, whether it's red tape, green tape, multicoloured tape, whatever it might be. The majority of family small businesses are unable to manage and deal with that complexity. A lot of it is designed by government policy, translated by government departments that are used to having HR resources and a range of other things. So we need a lot of simplicity there, Matt. We still need a very simple small business award. So rather than this complicated award system where even Fair Work Australia can't actually tell you which award applies, for the majority of businesses that are very small and may have, up to 4 or 5 staff, having a very simple small business award that applies across the board would really simplify employing people. Look, and I think the third thing is, and we don't see much about it in the budget, but we'd certainly at Small Business Australia, where we've led the charge on the buy local movement for a number of years, is we'd like to see every government department and every government instrumentality and every organisation that gets government funds, and there's thousands of them, we'd like to see the majority of that money spent with Australian-owned small businesses in those communities, as opposed to where a big chunk of it's going now. So let's put the dollars to work with the local businesses, with the small businesses, so that we get a much better return in terms of the contribution that those business families can make, to their communities.
Thanks, Bill. Great insights. And as agreed, we'll let you head off to bed. Appreciate your thoughts.
Thank you. Thanks very much.
So rounding out the thematic discussion of last night's budget is our very own Greg Will. Greg's a Sydney partner specialising in the SME market, who will provide some comments and insights in respect of our business sentiment survey. Greg, welcome to today's breakfast. Can you tell us a bit about the survey and what did small business want?
Yeah, thanks, Matt. Prior to the federal budget, SW did their sentiment survey to see some of the issues that were prevalent in small business, to see if the federal budget would actually answer some of the issues that are coming out from small business world. And we largely grouped them into 5 key areas, which are on the screen at the moment. And those 5 key areas, as you can see, the first and biggest area is people, people, people. Small businesses and medium businesses are having a real issue at the moment, attracting, retaining and incentivising key people. Bill and Madeline mentioned around the unemployment rates that are historically very, very low at the moment. And small businesses just cannot find the right people for the right jobs at the moment. They are really wanting to get access to skilled labour. Equally, there are wages pressures. While the numbers aren't playing out at the moment, there are a number of people that work at small businesses that are telling me that employees are obviously, because of cost of rising pressures, looking for those wage increases. The other issue is cash flow. So cash is always king in small businesses, but around budgeting and forecasting and getting access to capital, Small businesses are really struggling at the moment with cash flow. We're hearing from insolvency practitioners in the market that the ATO are going very, very hard on making sure that outstanding taxes are paid, and they're issuing record numbers of director penalty notices, or DPNs as we call them in the industry, which largely say to small businesses, if you have not paid your outstanding tax arrears and you cannot get on a payment plan, we will look to wind your business up. So cash flow is king. We've all heard about the rising cost pressures in family budgets, going to the grocery store, buying your groceries. Well, that is also happening in the small business world. Rents are rising. As I mentioned, wage pressures are coming through where wages are rising. Small businesses are really struggling to maintain their margins. While they would like to increase their prices of their goods as well, it is a real struggle, and they don't want to add to the pressures that their customers will face. But we're all seeing out in the marketplace, I think we've all received a notice from a supplier we deal with, whether that's in business or around the family table, that prices will go up anywhere from 5 to 7% in the next 12 months. So small businesses are feeling that as well. Small businesses just do not have enough time at the moment. This has been a prevalent issue for a number of years. Technology and the way it's helping us with our lives is great, but small businesses just don't have enough time at the moment. And so this is leading to mental health issues. This is leading to work-life balance issues. Everyone knows that small businesses are the engine room of the economy, but it's really putting some strain on them at the moment. And lastly, which is a bit of a different one, that coming out of the pandemic, particularly in the white-collar sector or the administration sector within small businesses, they are really struggling with work from home or work from the office policies. They're trying to cater for a number of different cohorts within their workforce. Should they have a hybrid system where 2 or 3 days of work people come to the office? Should they go to a full 5 days a week again, or allow people total flexibility and work from home? Some of these issues that larger businesses have the resources to grapple with, small businesses just do not have those resources to be able to answer these questions. And so that's also leading to some of the issues about attracting and retaining key staff. So what we did, if we go to the next slide, Matt, we looked at a SME sentiment tracker. So back in March, coming off the back of our survey, we wanted to do a short pulse to see if some of those issues that I just spoke about, if they still resonated. And one of the issues which links to cash flow came through loud and clear, that 30% of our respondents in that sentiment tracker said that they would not be able to meet their financial commitments into the next quarter. And as I mentioned, the ATO can see this, they're chasing debts, they're issuing out those director penalty notices, and it's becoming a real struggle to make sure that small business can meet their financial commitments. They also mentioned around some of the things that Bill mentioned and resonated in our survey about increasing business costs, managing cash flow, managing employees, and that work-life balance. And you can see that table there in the right-hand corner of the screen around skills shortages and how it's tracked over time, about making sure that we can get staff with the right skills for our business. 6 out of 10 businesses back in July said that this was a major issue. You can see that it's waxed and waned over the last sort of 12 months, but it's still well above 50%. So more than half of the businesses out there cannot find the right staff for their business. Coming out of this budget, we felt that there may have been something there around finding those people. So if we go to the next slide, Matt, one of the things we wanted to do was say, coming out of the budget with a quick pulse over the last 24 hours, will you actually meet your financial commitments? We've seen that 30% of businesses we said could not meet their financial commitments over the next quarter. That came out in a March pulse. So we wanted to see just quickly, does that still resonate? It also came through in our full October survey last year, and you'll see there that 30% said it there, similar to the pulse back in March. But if you add the two bottom categories of the responses in that survey box of unsure and worried, that leads to close to 60% of businesses, 6 out of 10 businesses are saying that they will still not meet their financial commitments in the next quarter. So that has jumped, that has doubled. That has gone from 30% to 60%. So these financial pressures that you're not only feeling around the kitchen table, but that small businesses are really feeling at the moment, they wanted to see something more. They wanted to see something into this budget that would give them some form of relief so that they could see how things would play out. Now, if we go to the next slide, as Bill mentioned, that there was some things out of the budget, and one of my partners in our business and private client area, advisory area of Chris Dexter, he'll be talking in more detail around some of these initiatives that came out of the budget. But one of the things that came out of the budget was an incentive to buy energy saving equipment that the government wanted to incentivise small businesses to buy that equipment. And if you bought up to $100,000 worth of that equipment over the next 12 months, over the next financial year, they give you an extra 20% tax deduction on that equipment. Now, as you can see, overnight, we launched our business pulse to see, does that resonate with small business? And as you can see there, if we add the two red responses there of no and unsure yet, we've got almost 80% of businesses, 8 out of 10 businesses saying they are either not sure or this will not help them save on their energy costs and managing their energy costs. So we feel that the government could have done more. We can see the intent of them wanting to make sure that small businesses drive some of this energy efficiency through some asset purchases, but small businesses just do not have the money. They do not have the cash flow to invest in these type of activities. And so that's coming through loud and clear in terms of our Pulse survey. Last, if we go to the last slide of mine, Matt, we're seeing there that, again, in our sentiment tracker that we work with Small Business Australia back in March, we looked at, would you look to increase some of the capital investment in your business? And that was up 7% from previous surveys in March to 26%. But when we delved into that and saw what sort of equipment small businesses were looking to invest in, they were looking at computer equipment, hardware, keyboards, monitors, telephone equipment, that IT equipment to make them more efficient. They definitely weren't looking, as Bill pointed out, at utes or delivery vans or into these energy cost-saving assets that are trying to be incentivised out of the budget. Small businesses are concerned about rising energy costs. You see in the point there that 8 out of 10 businesses, they are concerned with energy costs. So they do want some relief there. And you can see the movement or the trend overall of that budget, of those sentiments coming through in the last 12 months. It reached as high as almost 90% back in July. It's come down to about 76%, but it's still a real big issue, particularly for some of the manufacturing area of our small business cohort that spend a hell of a lot of money on energy. They are really concerned that their margins will be hit by some of these rising energy costs. So you can see the sentiment in the market from what small businesses wanted. Largely, we don't feel that the federal budget actually provided enough to small business to be able for them to navigate through this challenging time. And so that's where we saw some of the results coming through. And obviously, some of our experts will go into the detail of how or if some of these things were looked at. But what I'd like to do now is, I guess, launch another poll live here on the webinar so that we can see of those respondents that are here today, what you think about some of the things that came out of the budget and some of the rising energy costs. So our number 3 poll is, will you spend the money to get this tax break to help you manage the rising costs of energy? And obviously, if you could answer yes, no, or if you're unsure at the moment, let's see if those results at the end of the webinar track anywhere near some of the results that we found when we launched the survey over the last 48 hours.
Thanks, Greg. As you say, the numbers don't lie, do they? Pretty powerful stuff. So it's now time to look at some industry issues, and to help us dissect last night's budget, I'm going to hand over to a number of my SW colleagues from around the country. We'll keep this pretty short and sharp, and simply draw out the headline issues for each of these industries. First up is Luke Fernandes of our Melbourne team to discuss how the budget impacted the agribusiness sector. Luke, welcome, and over to you.
Cool, thanks very much, Matt. So look, this is very much a risk management and mitigation budget for the agribusiness sector. There's two focuses that you can see from what they're proposed. So focus on climate change and a focus on biosecurity protection. So the first aspect that they were looking at was an additional $1 billion of funding for the Australia's biosecurity system. So they're getting pretty serious about the risk of invasive pests and diseases. So one of the most common ones that have popped up in the media has been the varroa mite, currently affecting Australian honeybees. So this is a serious concern for food producers in Australia, as it should be. Unfortunately, one of the downsides of this particular additional funding is that it's coming from an additional biosecurity protection levy targeted at Australian producers, which does little to keep food affordable. The National Farmers Federation has already come out today and said that instead of the government increasing direct costs on Australian farmers, they should have actually targeted those that are the actual creators of the risks, which I agree with. Climate change, they are actually spending an additional $38 million towards improving prediction analysis modelling, which is quite positive to see. And in a similar vein, the government is also allocating $302 million towards sustainability and climate resilience initiatives. Unfortunately, we don't have much detail on this yet, but our grants and R&D team will release details as we find out more. There's also $236 million that's been allocated towards improving Australia's flood gauge network, which, as we've seen, particularly over the last year, is incredibly critical for us. Now, the shortage of labour has also been a pretty serious concern over the last few years, in particular for the farming sector, and particularly a shortage of seasonal workers. So it's good to see that an extra $370 million has been allocated towards the PALM scheme, which will help provide seasonal working visas from the Pacific. Now, to close, unfortunately, the export market development grant is being wound back. So for those looking to undertake exports, that's not a positive development. So very much, as I said, a risk management and mitigation budget this year. Thanks, Matt.
Thanks, Luke. Before we head into our next industry group, we might just go and do one further poll. Poll 4. So for SMEs, with the latest interest rate rise, how confident are you in meeting your financial commitments for the next quarter? Very confident, confident, unsure, or worried? As Greg indicated, we'll compile these results and provide them at some stage today. So whilst you're completing that poll 4, we might now turn to the education sector, and Matt Paull from our National Education Group can take us through how the federal budget last night impacted the education sector. Matt, over to you.
Thanks, Matt. Great to be here. The key takeaways for the education sector, firstly for higher education, is that the government is delivering an additional 20,000 supported university places in 2023 and 24. The additional places are aimed at addressing skills shortages and giving more students from underrepresented backgrounds the opportunity to go to universities. They've also announced additional funding of $18.7 million to extend and expand existing higher education student support programs. The main part of this funding of the 18.7 million is that 17.7 of that is relating to additional funding for the higher education disability support program to enable providers to support students with a disability. So this will include the providers to purchase equipment or modify teaching materials and delivery methods and that sort of thing as well. It was also announced for schools that they were delivering 100.4 million to First Nation students. And within that $100.4 million, there's 40.4 million to improve school attendance, engagement and learning outcomes for students in Central Australian schools. They're also investing 38.4 million to pilot community-led and culturally appropriate distance learning models in remote locations. And there's also a further 21.6 million to extend the Indigenous boarding providers grant programs for 1 year as well. You can also see on the slide there, there's 35 million to attract and retain people to teaching. And there's also an additional 9.3 million of additional funding for the National Teacher Workforce Action Plan. For TAFEs, the government's providing funding for 300,000 TAFE and vocational education training places to become fee-free. And in the early education space, there's 72.4 million over 5 years to support the skills and training of workers in early education and care sector. So within that 72.4 million, there's 34.4 to support educators to undertake professional development and 37.9 to provide financial assistance to educators to complete educational requirements for a bachelor or a postgraduate degree. So that's the education in summary, Matt. Probably nothing major for education and no real surprises for education in this budget, Matt.
Thanks, Matt. Seeing from your summary there, it could have been better. Okay, next we're going to hear from Chris Dexter, a partner in our business practice and corporate advisory group. And Chris will talk through last night's announcements that impact the individual, SME and the superannuation sectors. Chris, over to you.
Thanks so much, Matt. So as you can probably see from the slides there, the majority of the announcements sort of revolve around the small business side of things. So if we start to sort of work through those, the first one is in relation to the instant asset write-off aspects, which Bill talked about earlier. So I guess the most important thing to sort of refresh our memory on is that the COVID-19 special pandemic measures with regard to temporary full expensing and whatnot, that does still come to an end at the end of next month. So where we're now left in the 2024 financial year is then going to be back to $20,000 threshold on the instant asset write-off, and that'll only be relevant for businesses with a turnover of less than $10 million. Where we go to subsequent to that, I guess anyone's guess at this point. So then the next point is probably not so positive for business, and that's in relation to the changing of the timing of when superannuation guarantee contributions need to be made by employers. So this was sort of talked about a bit before the budget, and they are looking to now make it effective from 1 July 2026, so some time away, that you'll actually have to make those contributions at the same time you pay employees. So certainly for large employers and whatnot, this will be quite a big cash flow headache should it come into place. So then I've gone wrong order here. Then in relation to the small business energy incentive, so this was something that Greg mentioned in his presentation, so I won't necessarily spend a lot of time on it, other than to note that, as he mentioned, you do get a bonus $20,000 deduction or up to, should you make $100,000 of eligible expenditure in the 2024 financial year, and the turnover threshold for eligibility on that one is $50 million. Equally, in relation to some sort of energy incentives, as was also mentioned earlier, for certain vulnerable households and small businesses, for the next 2 financial years, you may be eligible for some payments To help with the cost of energy, maximum entitlement is $500 for households and $650 for eligible small businesses. It is mentioned in the paperwork that the eligibility, you won't need to apply for it, you'll just get paid that money direct. The next point was just in relation to some cash flow assistance issues, and this was also done last financial year. So for businesses and individuals that make payments under instalment method for both GST and PAYG income tax instalments, the uplift factor that will be applied in the 2024 financial year will be halved from what it otherwise would be. So it's only going to be 6% instead of the 12% that it otherwise would have been. We've also made mention earlier in the presentation about the ATO's increased activity with looking to try and basically get people up to date and collect some of the debts on lodgements and whatnot that have basically blown out over the pandemic period. So carrot and stick approach. So one of the carrots that they're now trying to employ to get people up to date is they're offering an amnesty on failure to lodge payment penalties for certain eligible small businesses. So these are for businesses with turnover of $10 million or less. And it relates to lodgements that were due somewhere between December 2019 and February 2022. And that amnesty runs from the 1st of July this year to 31 December this year. Next point was, as Luke mentioned, so the Export Market Development Grant is now being effectively wound down and abolished. And last but not least, for the small businesses, one of the other announcements that they made, so this revolves around the FBT exemption for certain electric vehicles. So for plug-in electric vehicles, they will no longer be exempt for any cars acquired after 1 April 2025. But from the limited detail, it does appear that existing vehicles will be grandfathered. Moving on to individuals, very little by way of announcements here. Perhaps most importantly was the fact that there was no announcement or comment in relation to the proposed stage 3 tax cuts. So at this point in time, we're still on track for that, but that's probably only ever going to get mentioned in the next budget, you'd likely think. There only was a discussion about Medicare, some small changes to the low income tax threshold for those Medicare levy provisions, and also some additional relief for lower income earners that receive a lump sum payment and making that exempt from Medicare. And that primarily revolves around payments in relation to back payments for wages underpayments and whatnot. Last but not least, on the superannuation side, so as previously announced before the budget, they are looking to increase an extra 15% tax or income tax on earnings for people that have large superannuation balances. No new information on that one, unfortunately. So it does appear that at this point in time, at least, it is going to be enacted as they've previously said. So it includes all the potential nasties of taxing unrealised gains and whatnot, unfortunately. So overall, Matt, probably a bit disappointing on the business side, no real meaningful reform, but having where we sat 6 months ago, the fact that there's no new real meaningful revenue measures pushes us up to a 3 out of 5. Thanks very much.
And a C+ I see, Chris, which if you're in first year uni is okay, yeah? So you take it.
Indeed, a bit generous perhaps.
So just before we get to introduce Simon, I might add that a sector that normally does pretty well in the budget is the property and infrastructure sector. There are some important changes to withholding tax rules for the build to rent sector, which are going to be addressed by Simon. But otherwise, there were little new announcements or programs announced for the sector. Tassie got $300 million for the new stadium in Hobart and the refurb of the Launceston Stadium. The Brisbane Olympics was allocated $3.4 billion over 10 years to support the venue infrastructure. The government withdrew $870 million of funding for national water grid projects. These are things like dams and pipelines. And the government has decided to undertake a review of the infrastructure investment program to ensure, in their words, the $120 billion of pipeline over the next 10 years is fit for purpose. So one can only imagine some significant funding withdrawals as a result of that review. So all in all, a pretty lackluster budget for the property and the infrastructure sector, which will place, no doubt, more pressure on housing crisis in Australia. So our next presenter this morning is Simon Tucker, one of our technical partners from our tax group. There were some important announcements last night and the week leading up to last night that sit across the industry. So Simon will provide a brief overview of these. Simon?
Thanks, Matt. So as Matt said, there were a number of tax measures, not a lot, but some, as Madeline had pointed out, and I'll talk about a bit of those today. And so the first thing I'd like to talk about is the proposed changes to the build to rent measures. And so this build to rent has been an interesting area, particularly in the property funds management space over the last five years. There's been some challenges with this sector, mainly due to the potential tax impediments. And so as part of the government's package to, I suppose, increase the housing supply and eliminate some of these impediments, there's a proposed reduction to the withholding tax, where we have a distribution from a fund that holds a build to rent project. The tax rate on those distributions will be reduced to 15%. Currently, the rate of tax is 30%, and this is for payments to non-residents. There's also an increase of the depreciation or the write-off rate for eligible capital expenditure on such BTR projects. So currently, the write-off rate is 2.5%, which represents a 40-year write-off. We're now moving to a 4% write-off, which is, I think that represents a 25-year write-off rate. So these measures will start from 1 July 2024. And so that measure, as Matt had indicated, had been announced almost a fortnight ago. Again, a bit of a rehashing of the budget. The next item is the extension of the existing clean building MIT regime. So the existing rules apply to specific buildings that have a 5.5 Green Star or neighbours rating, and that for buildings that are commercial buildings that are office buildings, hotel or shopping centres. These rules will be extended to for property funds that are MITs for assets that are, I think, 6-star neighbours or green building rated for warehouses and data centres. And so these rules will start from payments made from funds from 1 July 2025, so the 26th year, so a few years yet. Now, this is the next item is pretty significant in that it relates to a lot of the work done by the government in BEPS. And so we'll have an introduction of a two I guess minimum taxes for global and domestic minimum taxes, and these rules will start from income year starting after 1 January 2024. And there is a threshold for application of these rules, and based on the information we know to date, the threshold is will apply to groups with global revenue of greater than 750 million euros, which is roughly $1.2 billion Australian. And so there's some detail has been released on Treasury from this, but this will be one that will, I suspect, get a lot of attention from the industry. We have some expansion of the general anti-avoidance rules, and these existing rules act to cancel any tax benefits that have been entered into for the dominant purpose of obtaining a tax benefit. And the rules will be expanded to situations where there's a reduction in withholding tax for foreign residents. Now, withholding tax isn't an income tax per se, and so there will be an extension of the rules to that. And there will be also an extension to the rules where the purpose or the dominant purpose of the scheme to get the tax benefit was, in fact, not to reduce Australian income tax, but to reduce foreign income tax. There's also some changes. This government is also making good on some announcements enacted or renounced by the previous Liberal government in changing or reducing the scope of the non-arm's length income rules as they relate to expenditures. That's good news. There's some changes coming if you're an insurance company or a general insurer. There are specific accounting standards that you need to adhere to, which mean that you have some pretty significant differences between what would be your accounting income and your tax income. And so these measures will seek to align, I suppose, accounting and tax for the most part. The government has also announced a few other changes to dates and measures that were announced by the previous government relating to some integrity measures relating to paying frank distributions that are funded by capital raisings. Some changes to the start date for some administrative measures relating to fuel tax and fuel excise and alcohol. And so these will be pushed back to 2024. And there will be a cancellation of the proposed 3 patent box concessions that were announced in 2021 and the 2022 budgets that had been announced by the then Liberal government. Other than that, there's not a really significant amount of changes. There are some changes to the petroleum resource rent tax that Blaney will talk about, but aside from that, fairly light on from an income tax point of view. Yeah, that's all for tax. So thanks, Matt.
And a good segue. So it wouldn't be a budget breakfast morning without hearing from Blaney Morgan, the leader of our energy and resource practice. Blaney, there seemed to be quite a few announcements for the E&R sector last night.
Yes, there were, Matt, and I think it's quite reasonable for there to be so many announcements when you have statistics like 81% of small businesses being concerned with energy costs. And I think that energy is not just a discussion for small businesses, but also households, and the government has put a real focus on this budget on energy. A few of them are continuations of previous announcements, but there's 2 new areas that they've put big dollars in, which is the industry focus, which is particularly hydrogen, and then the households and small businesses getting relief on their bills. And in the budget, there's $1.5 billion for this, but it's also matched with funding from the states too. When looking overall, I think there's a lot of things that are being set up for the future for energy and resources. The government has targets front and centre for emissions reduction. So aiming for a 43% reduction by 2030 and to get to net zero by 2050, you have to put in a lot of money in, but also there's a lot of smaller studies that are being funded in this budget that are setting things up for the future. An example of that is there is a study to do with hydrogen when looking at overseas and what the impact of this would be. And I think this is really a response to the Inflation Reduction Act of the USA that has multi-$100 billion carrots for people to change their energy focus. And the equivalent in Australia would be $40 to $50 billion spend over 10 years. And I think in future budgets, we'll see these coming through, equivalent kind of acts as what the US has done. Just 2 things of note. Firstly, there's been a change in the commodity price forecast methodology. Our ANZ economist was very clear that this is a real big swinger in there, but the government has changed it for iron ore, coal, oil and natural gas. What it has been is a reversion of prices back to long-term, what they consider to be long-term pricing. It has been over 2 quarters, but it's now over 4 quarters. And those prices have also been uplifted. This has actually lifted the budget bottom line by $22 billion over the next year. And when you compare the pricing, so for example, iron ore today is priced at $107 US. The pricing that it's getting to is 60. So there should still be some upside, hopefully, for Australia over the next 12 months and hopefully get to that surplus. Overall, I think these changes are more realistic, albeit less conservative. The PRRT changes have been a long time coming. The changes are reflecting the tax being built for oil projects, which have a really quick payback. And now the projects of today are really big LNG projects, which have a longer payback period. There's lots of changes. The main one is there's a 90% cap on deductions. It's a reasonable result for the oil and gas industry, but I'd expect more changes in 3 to 4 years as they assess this tax on a regular basis and how well it's going, because it is a complex area, and you want to get it to hit the right notes. Looking at hydrogen, there's a $2 billion spending commitment for revenue support for investment in renewable hydrogen production. Now, hydrogen is a new area, but it could be the way that we get to net zero. But today, I don't think there's $2 billion worth of projects that are here today. And the type of projects that you're looking at today are sort of more trial projects in the $30 to $40 million range. Some of the comments in the media are saying that Fortescue Future Industries could be very well suited to take up some of these funding initiatives, because it is the one that has put the most money into these new projects. The guarantee of origin for hydrogen is a much smaller investment, but important to work out how to certify blue and green hydrogen. And energy is really complicated, because when you turn on your light, you don't know where the energy's come from. And it's gonna, but people do want to know that they're getting green energy, and especially in the hydrogen area. When looking at the right of the slide, there's been a lot of announcements that they've made that are really to do with things that have been previously announced, especially in the October budget. But they are announcing that these things are putting the dollars into these projects. So the Rewiring the Nation is a $20 billion commitment to spend on transmission infrastructure, which is and they're planning to spend the money in Tasmania on Battery of the Nation, Victoria's renewable energy zones, and New South Wales for transmission and more renewable energy zones. The transmission is the transmission line from South Australia to New South Wales. And I think that there's a gap still to be spent, which will be, in my personal opinion, will probably be the transmission that's needed for the Snowy Hydro upgrade, which I would expect to be coming through in the next budget once they've got that further along. There's also $14.5 million to accelerate the development of offshore wind. And we've seen a lot of these kind of announcements to do with hydrogen over the last 2 or 3 years. And it's now that they're putting in the $2 billion investment into hydrogen. So the government needs to get its ducks in a row before it can start announcing those big programs. And again, I would expect in the next 2 to 3 budgets, you would start to see those $1 billion programs for offshore wind coming up. There's the capacity investment scheme, which is a low cost that the government is planning to spend, only $15 million, but it's really to push through another $10 billion of renewable energy projects. I'd probably expect the government to also come in and back some of those energy projects through its existing funds, such as ARENA or the Clean Energy Finance Corporation. And then there's $3 billion of the National Reconstruction Fund for investments in low emission technologies and transition. And I think the budget is really about energy, but this is one that is also about resources, where they're trying to focus on improving how we search for and produce resources, and also try to onshore some of the manufacturing for these things. So I think there is things for resources in the budget, but not as much as for energy. Matt, do you mind jumping to the next slide? The Net Zero Authority, that's $83 million to building a new authority. It's really focused on regional Australia and how to transition industries and people in those industries. So it's very easy for everyone to say, well, let's just transition straight to this kind of fuel or that. But there are large areas of Australia and employment in regional Australia that's going to need to be managed. I think it's a really positive step. And it's taking a more of a holistic view of things. The Powering Regions Fund is a previously announced fund, but they have allocated $1.4 billion to 3 streams. So trades exposed safeguard facilities, industrial transformation, and critical inputs to the energy transformation. The last one I think is especially looking at things like aluminium, smelting, that kind of thing, which I think is important for transforming Australia long term with these changes. There is $100 million. A large portion of this has been previously announced, but this is a really large amount of money to go to the Australian Energy Regulator, the Australian Competition and Consumer Commission, and other funds. And it relates to supply regulations that are to enforce lower prices. So it's not just that the government's giving money to households and small businesses, it's also trying to force prices down with these funding to, for example, forcing producers to put aside a portion of gas, putting aside a portion of electricity, coal as well. And we've seen real reductions in the prices of energy overall, but they're still a lot higher than what they were 12 months ago. So moving on to some of the other areas, they're smaller, but still, I think they're kind of interesting to see what things will be coming through. There's, of course, the support for decommissioning and the energy changes for the gas industry, which I think is great as that industry transitions. There's also funding for reforms to the Australian Carbon Credit Unit scheme. And there has been a review on this that was released earlier this year. Seeing the funding in the budget means that you will see these changes enacted, and that will continue to be reviewed and enforced over time. There is funding in the budget as well for ASIC to enforcement on greenwashing, which ASIC is issuing infringement notices to companies. These are tens of thousands of dollars, but the tens of thousands of dollars pale into insignificance to the reputational damage that this kind of thing can do. It's hitting particularly energy and resources companies. It's also Australian companies that are operating overseas. And I guess the thing with this is just don't claim things that you don't have the studies to back it up. So even if it was to be that you were able to say it was a net zero project, you have to be able to have reasonable grounds and show that the project is that way. The next one is that there is also going to be the funding for climate disclosure, which is the Australian Accounting Standards Board. The international sustainability standards are getting set up for release this year. And I would be expecting that Australian companies would be having to comply, some Australian companies, because they haven't worked out which ones it would be, but your expectation would be listed companies first, would need to comply with these international sustainability standards, which are quite a lot of information. The last point is really just that there is funding, and again, it's a small amount, but a small amount that can have a big impact for a refresh of the white paper of for Northern Australia. And I would expect that this would lead to more projects such as the Sun Cable or the Fortescue Future Industries that would have more of a government framework behind it. So I think that's a really positive area as well. Overall, we rated it 3.5 stars. I think a lot of the things were things that had been announced previously, but were progressed. But I think also we can see that there'll be some great things coming in the future, and some really big projects that'll get funded, especially towards the election with the $30 to $40 billion fund for clean energy, which in the US is considered to be a big carrot kind of project for all people. So yeah, that's it for energy and resources, Matt.
Thanks, Blaney. That was terrific. So that brings us to the end of the presentations today. You might be interested in some of the poll results that we've been collating through today. So the first poll was, did the federal budget deliver? 5% said yes, that was down from 15 last October. 33% said no, up from 28. 22 in part, which was the exact same figure. How optimistic are you feeling about the next 6 months? 4% are very, up from 1%. 14% slightly, similar 13 last time. Cautiously optimistic, 47%, down from 61, and 19% very pessimistic, which was increased from the 10% last time. So the bell curve there looks like it's definitely flattening. In relation to our third poll, will you spend the money to get this tax break to help you manage the rising cost of energy? 13% said yes, 44 no, 43 are unsure. And our last poll for SMEs, with the latest interest rate rise, how confident are you in meeting your financial commitments for the next quarter? 14% said very confident. 32% are confident, 27% are unsure, and 27% are also worried. In the interest of time, we might skip the questions. We've done pretty well, to be honest, in answering those as we've gone along. Thank you for those that have answered. Before we wrap up, just a plug for our SME business series. This is a new series. There's 4 sessions. It's aimed at SMEs, and you'll see the session topics there: business structuring, growing the business, exit planning, and estate planning. More details on our website, sw-au.com. And that brings us to the wrap up. I'd like to sincerely thank Madeline Dunk of the ANZ, Bill Lang of Small Business Australia, who's hopefully fast asleep, Greg Will, and all of our industry and technical experts. It's also important to acknowledge all of the hard work and effort put into these sessions by our BD and marketing team, led by Amanda Lee, but assisted pretty ably by the team Rachel, Sarah, Hayley, Jess, Julia, Kate, and Derek. You can find Madeline's presentation, plus all of the key industry insights presented today, on our website, sw-au.com. On behalf of the SW team, I hope we were able to provide some insights on last night's budget. Thanks for your attendance, and please check out our content on the federal budget and other news and topics at sw-au.com. Thanks, and enjoy the rest of your day.